To our webinar, The 5 Trends Impacting P2P and How to Prepare for Them. My name is Mike Rule. I'll be your host today, and I'm the Marketing Manager for Corcentric. Our speakers for today's webinar are going to be the man, the myth, the legend, Mark Brousseau. Mark is a noted analyst, speaker, and writer with more than 21 years of experience in financial operations and services. Mark's going to be joined by Corcentric's very own global icon and national treasure, Dan Andrew. As a Senior Vice President for Corcentric, Dan works with some of the world's largest companies to configure innovative payable solutions that can deliver an immediate ROI. Now, we will be taking some questions during this webinar, and we'll try to get to as many as possible at the very end. In order to ask the question, simply type it in the Q&A panel located on the right-hand side of your screen and hit send. If by chance we're not able to get to it by the end of the webinar, someone from Corcentric will respond as soon as possible. Now, with all that being said, Mark, I'm going to turn it over to you and let you take the webinar.
Thanks so much for the generous introduction, Mike, and thank you all for joining us this afternoon. So in between Christmas office parties and ordering those last-minute gifts on Amazon, you've probably given some thought to how it is your organization might achieve the objectives that you've laid out for 2019. And that's what we're here to help you with today. We're going to talk about where it is P2P stands as we close 2018. And we're going to provide you with a look into what it is will be the biggest trends for next year in terms of technologies and approaches to automation. We'll also lay out the challenges you can probably anticipate in P2P. And most importantly, we're going to provide you with an action plan on how to do all of that. But we thought we'd start with a look at where we stand today in terms of the procure-to-pay function. When organizations were asked by our friends at Shared Services Link to tell us what their top goals for improvement were over the next 2 years, what stood out is that organizations want to become more efficient and more automated. To do that, they're going to have to change the way it is they go about their processing. Today, most procure-to-pay organizations still operate in a decidedly semi-automated fashion. And with that, many of them don't have the flexibility they need to deal with those big trends that are coming down the pike in 2019. What's more, many of you still struggle with achieving the straight-through processing that makes organizations so efficient. The fact is that most organizations handle most of the invoices they receive in a manual fashion. And we know that when you have manual processes, you have high costs, lots of errors, poor visibility, and frustrated internal stakeholders and suppliers. And organizations can't afford any of that because starting next year, organizations are going to put even more focus on their procure-to-pay function. They don't just want it to be efficient and automated. They want it to be best in class. Businesses recognize that a best-in-class procure-to-pay function helps them achieve efficiency across the financial supply chain. It helps them compete in today's increasingly competitive global economy. P2P is a focus of senior finance execs like never before. Dan, what is it? What is it that has senior finance execs so focused on the procure-to-pay function? What is it that they want out of these departments?
I think what it is, Mark, is that a lot of these companies today, they're discovering that the accounts payable departments are really hosting just a treasure of data with the information they have, with the efficiencies. There's a small percentage of companies overall that have really achieved full automation. And because those companies have recognized a major improvement for their organizations, other companies are gaining that knowledge base and understanding that those other companies are doing something different. and they're doing something better and more efficient. And they're asking themselves, how can we also share that same benefit?
So what was the big story in 2018 when it comes to P2P? Looking back, what did we accomplish as a profession?
I think one of the biggest things is one of the things I'm noticing the most is there is really an increased awareness level. The knowledge base of what can be achieved is now becoming more known. I think in previous years it was a discussion, it was a potential opportunity, it was a vision. I see companies realizing the vision in 2018 and they're saying it can be achieved, we've accomplished it, and the savings, as noticed on this group here with the peer group compared to the world class, it's a dramatic difference. Probably in many cases a twofold benefit for those companies that achieve world class compared to those in the peer group. And so because of that, they're saying, okay, we're achieving it and it is real. It's more than just a vision. It's attainable and it's value add to our companies.
Achieving those world-class results is going to require that your organization addresses 5 key trends that Dan and I foresee in 2019. Unless you have a plan for addressing and overcoming, in some of these cases, these trends, your organization is going to be stuck with inefficient processes. The first trend is that P2P is going to become more strategically important to the organization in 2019. There's no question that in today's business environment is more global, it's more competitive, and we have upstart companies that are completely disrupting entire industries. This means that the status quo is no longer enough. Organizations need to have better control and better visibility over their P2P function. Organizations recognize that P2P has got to be more important. What's more, it's going to have greater influence over the organization. It's not just going to be procurement. We're also going to see P2P having greater leverage over financial decision-making, financial technology purchasing, as well as data governance. And the key to all this is going to be that data that Dan was alluding to. Organizations know that the data that flows through their P2P and accounts payable function is extremely important to the organization. It helps the organization achieve those big strategic objectives that it lays out for itself. That data can be key not only for budgeting, forecasting, planning, spend management, and cash management, but it can help you find ways to drive profitability, increase net profit margins, and fund the innovation that can help you stand out from your competitors. The question, Dan, is how is it that organizations can leverage their data that flows through P2P to become more strategically important? What is it that organizations are sitting on, and how can they get at it?
I think what's interesting when they start looking at their data, and your slide showed that 76% of the companies have recognized they need to be more strategic. So companies that I've talked to have said, if we were going to create this ideal model within our organization and we started with a blank sheet of paper, would we do it the way we are today? And most of the times they say, no, we would change it. And the way they analyze that, Mark, is they look at the data, they start figuring out where are the suppliers that we're buying the most from, what's the opportunity look like, how many of them are paper, how many of them are we paying and not taking advantage of cash discounts. The data shows we're not managing our working capital as well as it could be. We're missing some of the forecasting capability from the data because we know over time when purchases flow through the offering, through the invoice, we can figure out when we're paying the suppliers, but we haven't been able to forecast because of the data. And so it all leads back to that information to say, once I have full visibility and I can see from the time we process an order through the invoice, and I can see the analytics within the organization, all those metrics, those are valuable data points within the organization and they can be leveraged. That's why companies are saying, I want to be more strategic.
Dan, give me an example of a Corcentric client that has used the data that's been provided through your solution to achieve a strategic objective.
Here's a great example. We have a client that they were looking at all their invoices and they said, This came from actually the Treasury Department. They said, we've digitized our supply chain. That's wonderful. We're doing a pretty good job of managing working capital, and we're doing an exceptional job of taking advantage of cash discounts. But where I think we need help, shouldn't we know when we pay a supplier, shouldn't we know if we track it all the way back to the purchase order, shouldn't we be able to forecast? And so what Corcentric did is we went back to the orders, and every time a purchase order is now issued, we look at the history of when the product was received, when the invoice was processed, when the payment was dispersed, and we can calculate from the day a purchase order is issued, we can tell that organization when cash is going to leave the building. Their treasurer phenomenally just saw that information and said, this is one of the most traditionally difficult areas in an organization to forecast because of the unpredictability of the buy. But now that you're using that signal from a purchase order all the way through pay, our forecasting ability is tremendously accurate, which improves working capital. So it kind of worked backwards with payments through an invoice, which every invoice is born in an order. When you put that whole cycle together, the value of being able to forecast that, just to give you one example, Mark, it's tremendous savings and better leveraging of data for that organization.
Dan, we know that 40% of all finance organizations rely on spreadsheets for their reporting. Somebody on the line right now is listening to you talk, and they think they've got it covered. They've built some pretty cool macros and pivot tables, and they think they can give folks what they need. Why are spreadsheets not going to cut it as we move forward in P2P?
Well, it provides limited visibility. It's a tool for capturing some information and managing it, but really the objective, I think, is to provide a holistic view. It's not just your area. This data is valuable for procurement, for the CFO, for accounts payable, for treasury. Many organizations that not only want to see the data, but they want to use it and manage it within their organizations. So you need a more holistic view than some of the spreadsheets and macros that you've created. Those are good, but those are really a stepping stone in order to make it better and best, which is what we really like to achieve with our clients.
Don't misunderstand Dan. When he says that's good, he really means that's bad. The second trend that P2P will need to be aware of in 2019 is that it's going to become more automated. Statistics tell us that about 3/4 of all organizations operate in a manual or semi-automated mode. What's more, about half of you have what I describe as a semi-automated environment for P2P. Maybe you have some antiquated scanning and OCR technology over here. Maybe you stood up a portal for some of your suppliers over there, but never really got anywhere with it. Maybe you have a little bit of EDI going on over there. But the reality is you've never normalized, standardized, fully automated your operation. And that's why you have all those manual processes. In fact, a study by Shared Services Link confirms this fact that most organizations are keen on finding ways to increase their level of automation. So if automation isn't on your roadmap in 2019, either you're fully automated or you're going to fall behind your peers. Organizations recognize that it's through automation that they're going to be able to achieve their big picture strategic goals for P2P. They can't throw more people at this. It's not better training. It's going to be through automation. And that's the budgetary priority of your peers today. First and foremost, it's procure-to-pay automation, not invoice automation that organizations are striving for. They're looking for solutions such as those from Corcentric that provide automation across the life cycle. In some cases, even starting at sourcing. They want the ability to have control, visibility, and efficiency all along the way. What's more, organizations are also investing in data analysis and analytics, something you can't possibly have in a manual environment, and certainly not if you're relying on those spreadsheets that we just mentioned. And yes, AP automation continues to be a priority for organizations. Too many of us are still pushing around paper invoices. And what's the objective? Well, organizations want to become more efficient, more cost-effective, to capture more discounts, and to free up their labor. Many folks have the mistaken impression that automation is all about bloodletting, getting rid of staff, and some of you are overstaffed. But the fact is that most of you have as much staff as you need. The problem is They're buried in heads-down transaction processing. They can't do the finance activities that they were hired to do, the things they want to do, particularly if they're millennial. So through automation, we can free them up to focus on value-added activities, things like contract management, supplier management, finding ways to improve payments to suppliers, cleaning up that filthy vendor master database. What's going to be the biggest storyline in automation next year, Dan? What will be the single biggest thing we're talking about next year when we're doing this webinar at this time?
I think what a lot of people are going to see and what we're experiencing with our clients are many of the points you talked about. When I see companies who can process 7,000 invoices with an FTE compared to those that process 17,000, and I see the cost of $4.80 compared to $2.27 for those that are best in class, you're talking about a 2 times factor of improvement. And so your point about value add, people want to spend time on doing analysis and adding value to the company. They care about the contributions they're making to their company. So if they're spending time on data entry and the manual, mundane functions that you talked about, compared to being able to provide analysis to help the company, you feel like, hey, what I'm doing here is making a difference in the decision-making process, you're going to see the accounts payable group continue to elevate in stature and in contribution to the organizations because of what they're doing, because of how they're unlocking that data, and how they are bringing to the CFO this valuable set of information to say, look, I am contributing in a great capacity, and it's just a win for the individual and the organization.
Someone on the line right now is listening to this conversation and saying, yeah, I get it. I know that. I know I need to automate. The question is, how do I sell it to senior management? I just can't seem to break through to get them to sign off on this. What are the magic words? What do people have to do to get senior management to buy off on automation when it comes to Procure-to-pay, Dan?
I think some of the greatest impacts we've seen are companies who say, when you take a look at our organization and you just use the metrics of what they have in their company compared to those that are best in class, the numbers are staggering. And the delta between where they're at and what it can be are phenomenal. So if you look at just some of the high-level elements to say, let's think about the cost, let's think about the working capital improvements, think about the discounts that we can enumerate within an organization and the productivity, and then the value add back to the executives in terms of what we can bring to the corporation. When you add those items up, most of the CFOs that see that, the value far surpasses the current model today, and it lets them see that there are companies who have achieved this. So it's a great way to benchmark an organization that's achieved it versus here's an idea that we think we might have. No. Here are some poster companies who have achieved exactly what we need to do. That's helped them dramatically.
So let's help out the person who's out there who has that lousy OCR solution that never quite worked right, or maybe that rinky-dink homegrown portal that suppliers hate. What can they do? How can they get fully automated? How can a solution like Corcentric come in and in some cases work alongside or replace those technologies so that they can achieve full automation?
I would encourage them to ask 2 questions, 2 simple questions in your company. Number 1, how many of your invoices get processed in straight-through processing where they're absolutely touchless? How many? That's a great indicator of opportunity for improvement. If you're processing invoices that you're touching and working and managing exceptions and you're dealing with all the time constraints and the lost opportunities, that's expensive. It's a bad way to go. Number 2, are you issuing any payments today that are not electronic? Again, lost opportunity, easily resolvable, and very quickly, if you identify those 2 pillars within the accounts payable organization, we want to become straight through process for our invoices, and we want to electronically make payments. Achieve those 2, and you're well on your way to that 4% that says, I'm fully automated.
One of the biggest technology trends of 2018, in my estimation, was the growth of invoices that arrive as PDF email attachments. everywhere I went, it seemed like organizations are buried in these PDFs. And everywhere I went, it seemed that organizations were handling them poorly. A lot of cases, folks are printing them out and treating them as paper. Some cases, folks thought they were clever and they bought their operators a second monitor so they could pull up the email on one screen and key them into their ERP on another. Help us stop the madness, Dan. What should organizations be doing about all of these PDF email attachments?
I would tell them, don't automate, obliterate. What I mean by that is look at your organization and ask yourself this question. How many invoices today are you processing that originated from an order? Because if there are, and I see this growing every day, most companies, I've run into so many companies this year particularly, who have said our new philosophy is no PO, no pay, because they want to get control. They want to get their arms around this data for all the reasons we talked, as well as the controls for increased productivity. Ask yourself that question, and then think about the orders that flow through your company. If you're able to distribute that electronically to your supplier and allow that technology to provide the data back to your organization electronically without a PDF, without an email, that can be streamlined into your organization, I guarantee you, you will have a high degree of straight-through processing. You eliminate printing them out, managing them, working through that process. You're going to electronically integrate that. And for those that you can't process through a purchase order driven invoice and you do receive the PDF and email, there are tools and ways to automatically and smart route that data. So once again, the information is processed straight through. The objective for your organization at the end of the day should be, I want all my invoices to get processed electronically. I don't want to print them out. I don't want to key them. I don't want to automate. I want to obliterate it. And I want to make this completely streamlined throughout my entire organization. That's the best-in-class model.
Let's paint a picture. Tell me about a Corcentric client that did exactly what you described and the benefits they were able to achieve as a result.
I saw a company, one of our clients today, and what they did is they said, we want to get to level 4. We want to achieve best in class. And they started out, they were paper-based, and they thought they were making progress as they were beginning to do some internal imaging and copying, and they were migrating to a level 2 image-based environment. And then we put together our tool set for electronic data interchange, the electronic invoicing, the full automation, the straight-through processing. And what they did is they redeployed a large number of people in their accounts payable department. They didn't terminate anyone. They were smart about it. They said, we know that you add value and knowledge to our organization, but we have better opportunities. And so they posted internally ways to leverage those team members. And so those individuals that were working on manual type functions, they became analysts, and they became helping the sourcing team for better buying. And so what they did is once they became straight through process for all their invoices, which they achieved, by the way, they were able to take the team members and help them just manage any type of exception, to analyze the reporting, to help with forecasting, to help with the buy. They became strategic, and guess what happened to the employees? They loved it. It was a major improvement. It was a good career path. It was an investment for the organization. They became a straight-through processing organization, an electronics payer, and they moved from level 1 all the way through the process to level 4 to an environment that it's a great place to work.
Is that possible in a year's time? So can someone listening to us today start on this journey in January and be in nirvana, as you described it, next December?
Yes, you can. And I would tell you that the first place to start would be to electronically issue the payments. Within 1 quarter, we've seen clients go from check writing and manual process to 100% electronic for payments in 90 days. During that time, we work with them to help define their business rules, because you have to be smart about how you set it up. But I've seen companies set up those processes, figure out the automation, and then the Corcentric team, in the years and capabilities and the thousands of companies and suppliers that we work with, you're leveraging a group and a base that you could never do on your own because of what Corcentric brings to the table to rapidly deploy an offering that's been deployed so many times. So they take advantage of the economy of scale. On your own, you'd look at this as a daunting task, one that you really couldn't do on your own. It would take too long. You don't have the tools or the resources or the leverage of the economy of scale. So it's very attainable, it's reachable, and you're going to see more and more companies in 2019 achieve that best-in-class level 4.
When we look at what technologies organizations are using today, it's no surprise that workflow, electronic invoicing, and P2P automation stand out among the other types of technologies. However, when we look at what it is organizations plan to do over the next several years, what we see is a number of emerging technologies start to really take control. Tools such as intelligent data capture, robotic process automation, the ability to use computer-based robots to eliminate tasks that were formerly done by human operators, artificial intelligence, technology that does automatically things that used to require computer programming to do, cloud. These are the types of tools that organizations plan to deploy over the next 2 years. In fact, when Shared Services Link asked P2P leaders which technologies they believed would be the most important to the future of their profession, robotic process automation stood out among all the other technologies. Clearly, y'all have had enough of those manual, repetitive tasks. You need to get folks focused on the things that really move the needle in your business. What's more, we're going to see that electronification, the invoice process that Dan just described. Let's stop pushing around paper and paper-like processes, and let's start processing invoices electronically. What's more, we're not just going to automate invoice processing. We're going to automate the P2P lifecycle with solutions that provide holistic capabilities to organizations. And that brings us to our next trend for 2019. And that is the procurement and accounts payable are going to become more tightly aligned. There was a day in the not-so-distant past that many of us account payable practitioners didn't even know who our peers in procurement were. In many cases, they were on another floor, maybe in another building, maybe in another city, a different reporting structure, and we only talked to one another when all hell broke loose. And it was never really under the best of circumstances. Well, things have changed. Organizations have recognized that the tight alignment between procurement and accounts payable pays off big time in efficiencies across our financial supply chain. And in 2019, we're going to see a huge push toward Procure-to-pay. 60% of P2P departments expect that spend management is going to become more important to their organization. It's not just being able to have visibility in your cash. It's also being able to have visibility in your spend so you could control your cash. What's more, 38% of P2P departments expect that getting pre-approval for non-inventory purchases is going to become more important next year. And half of you expect the supplier of management will become more important to your organization. All across the way, organizations now recognize that that tight alignment of P2P is going to deliver benefits in terms of operational efficiencies, risk mitigation, and cash control. And Dan, when I talk to senior finance execs, they tell me all the time that this is long overdue, that they can't wait for the day when their P2P function is fully automated, fully transparent, and fully aligned. Is this what Corcentric's hearing?
Yeah, Mark, you're so right. And what's so interesting is when we meet with clients and you talk to them about their departments, when they bring in procurement. If you're meeting with accounts payable, procurement many times joins the meeting in the initial set, where in years past, you'd have to corral them in and encourage them to participate. Now they're joining because of the things you've noticed. They say, this is a problem that we need to solve together. It starts with procurement and it finishes with AP. And when you align those departments, that's the best way that I've seen companies really reach the whole straight-through processing.
Okay, so there's a lot of technology out there that's masquerading as a P2P solution. It really doesn't automate the P2P life cycle. It's just an AP solution with some marketing spin put on it. What are some questions you can ask a prospective technology partner to understand whether you're looking at one of those solutions or you're looking at a true P2P solution, Dan?
One of the great questions would be if you're talking to an organization and you try to find out, okay, here's our percentage of invoices that are originated from a purchase order. Let's just say it's 50%. But you say to your technology provider, I recognize that as I grow that percentage, I understand the value of obtaining straight-through processing for 100% of my invoices. What can you do to help on the sourcing piece? Because if you really want the best P2P solution, you need to have a sourcing solution that allows that company to really start with the buy. Because if you jump in where many AP companies tackle just the invoice, that's just a component of the overall need for the solution. You have to go a little deeper into that supply chain. You have to go back to the order and the sourcing. That's where you can have the full-blown P2P because you're starting with the entire process. So look for technology providers that can go deeper than just the invoicing and digitizing a piece of paper. You want to go back deeper in the supply chain.
Our next trend for 2019 that P2P needs to prepare for is that organizations are going to complete the last mile. For years, when it came to paying your suppliers, that meant cutting a paper check, stuffing it into an envelope, affixing postage, and sending it to your supplier. Somewhere down the line, you had to inevitably deal with a phone call from that supplier about where's my payment. And then you had to reconcile the whole thing. It was laborious, it was inaccurate, it took a lot of time, it frustrated your staff as well as your suppliers, and it provided precious little visibility. Well, organizations recognize that it's no longer enough to stop their automation journey at the point that you're approved an invoice. They now know that being able to pay suppliers automatically, electronically, and furthermore, optimizing those payments can deliver just as much benefit and in many cases, even bigger benefit. And high time, paper checks are finally losing their grip on B2B payments. And over the next 3 years, organizations actually expect that they're going to pay more of their suppliers via ACH than with paper check. And what must surprise some of you is that virtual cards will make up nearly the same percentage of payments to suppliers as paper checks over the next 3 years. What the devil's going on here, Dan? Why is it that organizations have finally embraced electronic payments? And what does it mean to the folks on the line today?
If I'm an organization and I'm issuing a paper check and my supplier's calling me saying, did you mail my check? Am I going to get paid? When am I going to get paid? How much am I going to get paid? That's all a bunch of noise to the buyer. So when you electronify that, and I've seen companies add a very smart value add function to their suppliers, what they do is they digitally tell the supplier when they're going to get paid. So they'll say, your scheduled payment is on December 28th, and they'll tell them that ahead of time electronically. Then on December 28th, the payment shows up. So if you're a supplier and you gain that visibility, guess what? You're going to stop calling the buyer. You're going to see that that cash is coming. You're going to be able to plan your business better. That's a value add to you, the supplier, and the buyer. So the desire for that visibility, Mark, is pushing back to the buyer so they understand that's a need and a want for the supplier. On the buyer side, because they can pay electronically and they're offering that visibility, they're optimizing their payments, they're getting rid of the paper, they're recognizing that the old way, the check way that you described, it's archaic. It's a way that really doesn't take advantage of the data, and that's something that the suppliers want. It's a more efficient manner. There's more security. There's so many different benefits that it's a way that I think the companies, and you're going to see more and more of this as we surpass and ultimately get rid of check payments overall. That's a big push right now, and it's continuing.
Dan, you alluded to something earlier that's a very important point, and that is that optimizing your payments to suppliers can actually fund the freight for automating your entire P2P lifecycle. Talk about that. So
there's so many opportunities when you take the electronic information from your system as a buyer, and you fund that payment to the suppliers. There are companies like Corcentric that know how to take advantage of that electronic stream. And because of that, they're able to not only reduce costs, there's value in virtual cards because the suppliers get remittance data all the way through the process that they can electronically integrate into their AR. That value is worth a couple of points for the whole payment model within a virtual card. Companies like Corcentric have figured out a way to economically entice the value to the supplier, create a revenue stream that helps reduce the offering so that for the buyers, they're not only gaining electronic processing, they're doing it at a reduced cost, at a savings model, and they're giving the supplier everything they want, and the third-party provider wins because of the economic model that was created. You're seeing more of that. Companies are figuring out the value, and it's a way to really streamline and support, as we discussed earlier, the entire ROI discussion back to the CFO.
Make no mistake about it, folks. Suppliers want to be paid electronically. 80% of them want to increase the percentage of electronic payments they receive from their customers. And there's a lot of reasons for that in terms of accelerating their DSO, improving visibility, and improving their own operations. And of course, the headaches of having to track down missed payments. And when you look at automating your payments, you should take a holistic approach, as Dan described. You want to find ways to meet the needs of your suppliers as well as achieve the optimal results for your organization. Businesses tell us that there's a number of reasons that they haven't been able to embrace electronic payments. It starts in some cases with a lack of resources, concerns about supplier adoption, lack of supplier management, or a lack of a strategy. The reality is that solutions such as those from Corcentric make it easier than ever for organizations to not only start paying their suppliers electronically, but to achieve the supplier enrollment that's required for them to get the optimal results. Our fifth trend for 2019 that P2P organizations need to prepare for is that P2P is going to transform into a profit center. Dan described the value of electronic payments, but some of the other approaches that organizations are taking to optimizing working capital are delivering even more exciting results for businesses. And if you combine working capital optimization with the process efficiencies that you can get through automation, you're going to achieve 5 times the financial benefit of just those process efficiencies on their own. There's a number of ways organizations are doing this. 57% of P2P departments expect to earn more card rebates within the next 3 years. These are rebates on spend made via virtual card that helps defray the cost of your processing. 52% of P2P departments expect to capture more early payment discounts as a total percentage of spend. We know that 80% of suppliers are willing to exchange a discount on the invoice due amount for an earlier payment. They're trying to find ways to improve their DSO, and they're willing to pay you for it. 34% of P2P departments expect that their standard payment terms are going to increase between 15 and 90 days in the next couple of years. Here again, this is a lever you can pull to help optimize your supplier payments. Dan, what's possible for organizations? What is a Corcentric client achieved that might be compelling to the folks on the line today?
Some of our clients have, if they've decided to extend their payment, here's a beautiful model. They might take their payment terms from 15 days, let's say, or what I more commonly see, Mark, is they have payment terms from 60 and they decide to pay their suppliers at 90. However, with the Corcentric offering, we offer payment acceleration up to, let's say, 60 days. So that supplier that used to be paid in 60 days that is now going to be paid in 90 can opt to choose payment acceleration and get paid 60 days sooner, which now lets them get paid in 30 days, twice the time. They're getting paid twice as fast as they used to, and the buyer is extending their money. Why are they doing that? Well, here's what I've heard some companies tell me. They've said, because I've challenged them on that and said, why don't you just pay the supplier in 10 days and take advantage of the cash discount. And they said, well, that's good, but here's what's better for our organization. If we extend our working capital from 60 days to 90, the value of that money in the hands of our organization, even though the internal rate of return for that discount could be as high as 18 to 36%, we're investing in growth. And we're growing our organization globally. And the value of those new plants and those new offerings across our company are far greater than the cash discount, as an example. So we want to improve and we want to extend the terms to improve our working capital, yet we want our suppliers to be able to participate and get paid earlier. So that's one example where a Corcentric offering that sits in the middle can allow the buyer to extend and improve working capital while at the same time giving the supplier the opportunity to get paid faster. Other opportunities I've seen, Mark, are that companies say, I just really would like to be able to take advantage of the cash discounts, but I can't really do it because these suppliers are offering discount terms in 10 days, and the amount of time that it takes our organization to receive a paper invoice and to open it and to process it and to code it and to route it and to approve it and get it paid and get the disbursement, we miss the window. We can't do it within those 10 days, and so we're foregoing those opportunities for cash discounts. When you automate with Corcentric, those 10 days are easily achievable within a few days, giving the buyer the opportunity to take advantage of all those cash discounts.
All of this, ladies and gentlemen, is predicated on automation. Don't try this at home in a manual environment. You're going to drive yourself batty. Companies that use P2P automation are 7 times more likely to capture early payment discounts. And we know, as Dan just alluded to, that if you're in a manual and semi-automated environment, chances are you're leaving most of that money simply laying on the table. So how is it that you can prepare for these 5 trends that we just laid out? How is it you can make sure that your organization not only doesn't fall behind, but that it becomes best in class? Well, the first thing is you have to choose the right P2P partner. And that starts with an organization that can offer you the key features and functionality you're looking for. You want to make sure that your P2P partner has the ability to layer services on top of that technology. We'll discuss more of that in just a moment. And you want to make sure that these features and functionality simplify and automate your financial flow end to end. You want to make sure that it's not just an invoice automation solution, that it provides you with those capabilities from sourcing through payment settlement. What's more, you want to make sure your partner makes it easy for your suppliers and your staff to adopt and use the technology. Nothing thwarts a business case faster than staff and supplier reluctance to use it. What's more, you have too much riding on P2P automation to choose a fly-by-night vendor. And folks, there's more startups in this space than ever before. You need to have a reputable, established provider with referenceable clients of your size in your industry with your unique needs. For goodness sake, make those reference calls. And in terms of those services, you want to look for someone who can help you with strategic sourcing and electronic payment processing. These aren't nice to haves. These are essential, as Dan laid out. This is what's going to help move the needle, to help your department become more strategic to the organization, to help it achieve its big picture goals for 2019. So what do we want you to know? We want you to know that while P2P remains a largely manual affair, things are changing. And in 2019, they're going to change fast. We believe that the P2P function is going to become more strategic, more automated, more tightly aligned with AP, more digital end-to-end, and yes, more profitable. You might think that this is something in the far-off future, but you're wrong. If you don't take action, you're going to risk falling far behind your peers. And that could put not only your department at a disadvantage, it could put your business at a disadvantage. And with that, I'm going to hand it back to Mike. Mike?
Thanks, Mark. Both of you guys did a great job today. Lots of great information. Just as a reminder, if you have any questions on the right-hand side, please enter your question and hit send. And we've got our experts online, and we can get to a few of them here. First question I have here, Mark and Dan. This question is from Brandon. What KPIs do you recommend we begin tracking now, and how do we go about measuring them?
So there's 5
I can take that one.
Go ahead, Dan.
I was just going to say the couple that I would allude to, and Mark can elaborate further. I think for Brandon, a couple things I would do is I would look at, see if you can determine what your cost per invoice is. Think about the time. How much time does it take you to process? How much labor? What's the average number of invoices per FTE? That's a reasonably easy one to calculate. You look at your volume and you divide it by your staff. That'll give you a pretty good indicator. Are you best in class? And how do you compare to your peer group? Those are a few metrics, as well as how many payments today are electronic versus paper, because it needs to be 100% electronic. And finally, ask yourself, am I achieving straight-through processing? Are my invoices being processed through the organization untouched? And if so, how many? And which ones are not? Those are some pretty good preliminary indicators of your efficiency model.
Yeah, IOFM data tells us that there's a couple of metrics that really distinguish organizations in terms of efficiency and effectiveness. Cost per invoice, the number of invoices processed per FTE per month, the number of duplicate payments an organization has, the average cycle time per invoice, or in other words, invoices paid on time, and then the percentage of early payment discounts captured. When the rubber hits the road, those 5 metrics are the ones that really tell the story of an organization that's best in class versus those that are the also-rans. If you're not tracking any of those 5, when you hang up the phone today, I want you to start. And you can model those however you want, but just start modeling them so that when you look at solutions, including those from Corcentric, now you have a baseline. It's going to be really hard to build a business case if you don't have that baseline. Mike?
Great answer. Have an interesting one here. This one's coming from Alona. She would like to know, is the robotic process automation or even artificial intelligence, is that going to cause people to lose their jobs in AP?
So a funny thing happens when people deploy RPA and AI. Employee morale increases and turnover drops. I'm not making this up, people. The reason is what Dan was talking about earlier. When you use those types of technologies in your P2P process, you can redeploy staff from the drudgery, the mundane, the repetitive tasks like 10 keying, and put them toward the types of activities they actually want to do. And so organizations find that their staff feel more fulfilled. They feel more valuable. And that's because they are more valuable, because they're not doing transaction processing. Who wants to do that? So the answer is that staff love these technologies, and it will provide you with opportunities to redeploy staff to more valuable activities. And that's what most businesses do.
Okay, and looks like the final question I have in here right now, this one's coming from Benson. What are the best ways, or what ways do you actually recommend to get our suppliers up and submitting invoices electronically?
All you, Dan.
I think one of the best ways, Benson, to do that is to make sure that you're explaining and giving the supplier value. I encourage everybody in the audience to seek a trusted advisor, someone like Corcentric, who knows how to speak the language to the suppliers to tell them, here are the benefits. There's reasons that you're participating, and there's reasons that the buyer's asking, but more importantly, there's a tremendous ROI. The benefits, the things that Mark mentioned earlier about visibility, the security, providing them the capability to have the audit trails, to watch the process go through. If you answer it in the eyes of the supplier and take it back to them to say, here are the benefits for you, and many organizations have documented those in the industry to say, here are the benefits for the supplier to participate. Once they understand in their organizations the value that this whole process brings to them, the ROI is self-evident, and they immediately embrace in that type of opportunity. So it really starts with education and showing them the benefits they're going to gain.
Great, thanks, Dan. And looks like we do not have any more questions. So with that being said, thank you everybody for joining our webinar this month. We look forward to seeing you on future webinars with Corcentric. Have a great day.